right, everyone, welcome back to the big show. If you're new here, welcome. If you've been here before, you know Grizzle, we like to mix things up a little bit. So stay tuned, buckle up. We got a big few hours ahead. This is Grizzle Hard Money.
Hard money! Grizzle Hard Money, guys. We're bringing together the gold, the silver, the Bitcoin. We got a stacked lineup for you guys. We put together a heck of a lineup for those that are scared of what the government's going to do to take it all away from you guys. We're going to show you where you can keep your wealth, preserve your wealth, and that, my friends, is hard money. Scott, it would not be possible with our very gracious partners for Hard Money, and we're very honored to have Scott. Can you tee it up?
Yeah, so we got three key partners making it all happen. First is Hilltower Resource Advisors. They're a boutique natural resource research firm. Our first guest is going to be from that firm. Everyone on Twitter, you know her. We're going to introduce her in a second. Hang on. Next, we have Grizzle Research and Quant. It's your source for commodity insights and differentiated stock ideas. And lastly is Tidal Financial Group. They're a leading platform for emerging ETFs. We also have the founder of Tidal on with us later. That's going to be a fun conversation. So don't go anywhere. We're just getting started. The train has just started rolling. The first conference mixing precious metals with Bitcoin. It won't be the last, though.
Guys, get ready for it. We got none other than Tracy, Shy Girl. Tracy Shuchart. Come on. No!
Go.
Tracy!
Hello, Tracy!
It looks very warm and sunny where you are. Very nice.
Great to see you. It is. It's very hot here today.
Oh, Tracy, it's always a pleasure. Guys, if you don't know, Tracy's a part of the Grizzle fam. We do Twitter Spaces together. Everything together. The only thing we haven't done together is have drinks, in a fancy patio and doing that's on the schedule to be done.
Yes. That is
well, Trace, I'm gonna let Margot lead this. We had a nice little schedule here, right? Hard money, gold, silver, Bitcoin, but you're known for the physical commodities.
Exactly. So just big news yesterday. The Fed announced a pause in its rate hiking campaign, but signaled there still will be more hikes ahead. How do you expect this to impact the precious metal space?
Yeah, I mean, although we did see an initial move to the upside in gold after the pause yesterday, those gains have literally almost reversed overnight. We just took out the May low. We're bouncing a little bit right now. We had another reversal in USD, and I think it's because the Fed signaled that this was just a pause. They were very hawkish. I think you had a knee-jerk reaction yesterday, and then we're kind of seeing a retrace of that. In addition, Yellen's keeping the dollar strong so that we see more muted inflation in the U.S. So in other words, she's using it to try to rein in inflation here, which is actually just exporting it elsewhere, particularly in emerging markets. And, we've seen a lot of those currencies fall against the dollar. So as long as rising rate policies continue and we avoid a recession, I think it's going to be really hard for gold and other precious metals to rally to kind of break that triple top that everybody's been looking for. But over the long term, I do see gold much higher. It's been on that trajectory if you look back or out over a long-term chart.
Great. And so when we think about, so inflation is still hot. I think that's the kind of differentiator here right now. Maybe just to touch on that, coming down a bit. We've obviously seen it come down, and I think you had a great tweet there. I think it was the White House. The White House been all like, "Oh, listen, we brought inflation back to zero." But you're like, "Wait a minute. Yeah, you've notched it down a bit, right? The rate of change. Let's get that sorted." But maybe you could just talk about, in a historical context where inflation sits right now is at an elevated level, just how that impacts. Obviously, we're gold, silver, Bitcoin conference, but people know Tracy for the broader commodity complex. Just maybe your thoughts on that, and feel free to take it where you.
So really earlier, well, probably, earlier last year, I would say just about a year ago in midsummer, right? We did see oil being used as an inflation hedge over the gold market, because the gold market's more tied to rates, right? So right now, I think we're kind of over that inflation hump. The rate of change is slowing. That said, if we look at the commodity markets, the physical markets are still very tight, even though prices aren't reflecting this right now, and that's partly due to a strong dollar. I think as soon as recession fears abate, we get a clearer picture on what the Fed is going to continue to do, how many rate hikes are in store for this year and going into next year, and we start to see, say, an uptick in China's economy, I think the fundamentals will kick in again. In other words, I think this is kind of a temporary lull in commodity pricing. And as far as we are in, I think we're in a commodity super cycle right now. So, and another point that I just want to make kind of as a sidebar, particularly when we look at the gold and silver markets, the paper gold and silver markets are very different than the actual physical gold and silver markets. I mean, I guarantee you can't buy physical gold or silver anywhere near the price you're seeing on your screen right now. It's much higher.
And I just want to talk about silver too, because we know gold is primarily used as the store of wealth for luxury assets like jewelry, but silver is actually a lot more dynamic. Could you maybe talk to us about some of the tailwinds you're seeing for silver right now, if you are?
Absolutely. So I think many don't think when you think of the green economy, you don't really think of silver. But in fact, silver has many uses in renewables and industrial. So in 2022, industrial buyers were actually 51% of global demand for silver. And this is led by end uses in the green economy. And again, that's even forecast to rise again by 4% this year to a new record high. So the drivers behind these gains include investments in PV, solar, EVs, and just as an example, in hybrid vehicles, silver uses around 18 to 34 grams per light vehicle, while battery electric vehicles, regular EVs, consume a range of 25 to 50 grams of silver per vehicle. And so multiply that by how many vehicles are obviously being sold and what these 2030, 2035, 2050 goals are. In addition, silver is also used in battery storage, power grids, 5G networks, and consumer electronics. So last year, if we look at 2022, last year global silver demand posted a record high of 1.24 billion ounces. That's global record demand. And the lack of supply contributed to last year's 237.7 million ounces market deficit. And this was the second annual deficit on record and probably the most significant on record. And to note, the combined shortfalls of those 2 years comfortably offset the cumulative surplus we have seen in the last 11 years. So that surplus is actually gone. So, and then if we look at 2023, we're supposed to have an even bigger deficit of 430.9 million ounces. So, to put that kind of in perspective, that's equivalent to more than half of this year's forecasted annual mine production and more than half of the inventory presently held in London vaults. So, we're facing a big deficit coming into the silver market.
Yeah, that's we are very we've had a chance to talk extensively about silver with we have Dolly Varden coming up, but you really bring it into perspective there, Tracy. Now, one chart I wanted to bring up, I thought it was interesting. We're kind of on the verge of recession. It's kind of on everyone's lips. It's just it's coming there. The big question right now is, will the U.S. economy go into recession? And if that happens, how does gold usually perform during a recession? We're going to bring up a chart, but I think an interesting data points here.
Yeah, and so generally we do see gold up during recessions. In fact, the largest move we saw was in 1973, where it was up 87%. The second biggest move came in that 2007-2008 crisis at 16.3%. And so you can see gold performs very well during recessions. 1980 was probably the only anomaly, but we had a huge roller coaster up and then down. And kind of the dramatic spike and fall in gold prices were caused by a combination of extreme geopolitical events. You had the Russian invasion of Afghanistan in December of 1979. You had the Iran hostage crisis. And then you had strong unconventional policy actions and market events. The Fed under Volcker increased Fed fund rates from 13% to 20% for a short period of time in Q1 in 1980. And the Hunt brothers silver market cornering failed due to their inability to meet the margin call during falling oil prices in March of 1980. And that exacerbated the fall in precious metals as a whole. But in general, just some background. So in general, yes, gold and precious metals tend to perform very well during recessionary periods.
And I want to also get your take on maybe your view on the relation between the USD and gold. We want to put up this chart that shows, big central bank buying from emerging markets in the last decade. Maybe you could just talk about the correlation between like the USD and gold.
And maybe I'll just add to that a little bit, right? This has kind of been, the reason that, Bitcoin, it's this idea that the US dollar is losing reserve status. And, coming back to this graph, I think it potentially is, right, with emerging markets.
Yeah, absolutely. I mean, gold and USD are very correlated, obviously. At this point, we are seeing central banks, buying a lot of gold lately, and that's, they're hedging just like, you and I would. Like you have some gold in your portfolio to hedge against, adverse reactions. Well, all these other markets are buying gold to hedge against, their currencies falling against US dollar at this point. And so really they're using it as a hedge, just like everybody else is using it as a hedge. And again, Galen is, she's on this path right now to try to mute inflation in the US, which is again exporting inflation everywhere else. And so we're seeing a lot of gold buying from central banks.
Thanks. Thank you, Tracy. And so, just rounding it off, Russia's obviously got since the Russia-Ukraine war, we've been talking about sanctions there. It's been a main target for G7 sanctions, particularly natural gas. But what do you think about precious metals? Could that start to become a target, particularly? And also, we know they're one of the top gold-producing countries. I'll put up just a quick table there. We can show that for a quick sec, but I would love to get your thoughts, Tracy.
Yeah, actually in June of 2022, OFAC did enact sanctions against gold of Russian Federation origin, quote unquote. Russian gold federation is prohibited except to the extent provided by law or unless licensed or otherwise authorized by OFAC. And then as they announced that at the G7 summit, US was also joined by UK, Canada, and Japan. So certainly certain gold-related transactions are already sanctionable, but we haven't really seen a a huge impact on the market yet, and we haven't really seen the we haven't really seen EU jump on that yet. And again, there are a lot of loopholes in these particular sanctions, so we have to see if they come down harder in the next sanctions package. That's perfectly, I would definitely not count that out. And also, just while we're talking commodities, diamonds were also just recently banned. And then there's also a U.S. ban up in the government right now for debate on uranium, which the U.S. gets over 14% of uranium from Russia. So, I would be on the lookout for that, particularly if this involves Kazakhstan, because the U.S. gets 35% of their uranium from Kazakhstan. But if secondary sanctions go into effect, this is where the market could get really tight really fast, because Kazakhstan's, a lot of their uranium is produced in Kazakhstan, but it's processed in Russia. So if these sanctions go into effect and you have secondary sanctions, that market's going to get really tight really fast. In addition, Kazakhstan could just decide to sell it to China instead of having to even worry about secondary sanctions, because that market's growing much faster than the West. So just something to keep your eye on. I know it's not a hard asset, so to speak, but good information.
Tracy, always great, your insights. And guys, if you don't know, you can find us. You can find Tracy on Twitter at Shy Girl. Hilltower is the new firm. We're going to be doing tons more collab. Always good.
Wait! Before I go, I have my new fun fact that I just learned about gold.
Oh, wow!
Yes. So I just found out that gold, 22 karat gold, is actually used in F1 vehicles due to heat shielding. I guess gold is a great heat reflector, so they use it to protect parts of the car from heat damage. In particular, the engine generates a lot of heat, so they use gold to reflect heat away from the fuel tank, keeping fuel at an optimal temperature, and it also keeps the driver cockpit cool. So there's your gold fun fact.
Very good to know. So next time I'm next to an F1 car, I know the parts to pick off.
Right?
Don't mind me. I'll take this sheet of gold right here. Tracy, thank you very much. Always a pleasure. That's Tracy, Hilltower Resource Advisors, guys. If you don't follow her, obviously she's the center of all commodities on Twitter, guys. Thank you, Tracy. Guys, we're coming right back. Don't go away. We got a big guest next. Thank you, Tracy.
Welcome back to Hard Money, everyone. We got his hard hitter of guests as they come. Previously to what he's doing now, he was on the investment council of Bridgewater Associates, one of the largest hedge funds in the world. He's now become the go-to guy for everything economics on Twitter, at least in my opinion. And he recently left Bridgewater and he's doing big things, so we'll get into that. Welcome, Bob Elliott, to Grizzle Hard Money.
Thanks so much for having me. It's I'm really excited when you guys reached out to have me on.
Awesome. We were excited as well. So, Bob, you posted some interesting threads recently on Bitcoin, so I wanted to start there. Based on your public comments, it seems like you have a process for identifying emerging macro factors, sectors, and commodities such as Bitcoin. Can you talk us through how you are evaluating Bitcoin to see if one can make sense of what the macro drivers of Bitcoin are?
Yeah. I mean, I'm a macro investor by training and experience, and so a big part of what I do when I'm trying to understand what's driving a market, any market that's out there. What I'm looking at is how is it responding to the type of macroeconomic dynamics that I'm seeing in the market every day. And so things like, changes in growth expectations, inflation, other asset prices, what are the sensitivities of a given asset to those various dynamics? And Bitcoin in particular, I don't trade Bitcoin. I don't have a unique fundamental understanding. If anything, I'm sort of lucky because I come from a perspective of knowing not much about what drives the day-to-day market action. And so just asking the question, when connected to the macro drivers that I typically look at, the lenses I typically look at, what does it look like Bitcoin, what's driving Bitcoin? And I think one of the interesting things, and seems very pertinent to this group, is seeing an evolution in terms of the macro drivers going from what was for a long time basically a high beta technology play to increasingly looking like Bitcoin is being driven by the same sorts of factors that drive the gold market on a day-to-day basis. And so that was a very interesting change in perspective, at least from my view. Maybe that's obvious to everyone who trades Bitcoin, but I thought it was pretty interesting in terms of seeing that transition.
Yeah, well, that's why we brought you on. As much as anyone may be a Bitcoin maxi and think everything is amazing, it trades how it trades. It has certain relationships. And so it's good to bring in someone who's coming in with fresh eyes to kind of look at that and help us understand. So let me move to the next question. So I want to talk to you about a few thought-provoking Twitter threads you posted on Bitcoin. To start, there's this I'm going to throw up that looks at the correlation of Bitcoin to the NASDAQ over time. Why do you prefer to look at Bitcoin's price movements this way?
Oh yeah, I think the again, connecting to the sort of macro drivers, like part of the question and my intuition and understanding of Bitcoin was for a long time it was basically a way to create it was a view or a bet on technological innovation, right? In some ways, you could think about Bitcoin and really Bitcoin is representative of blockchain technology and other technologies. And so to the extent that those technologies were becoming more highly valued in general, around overall technology becoming more highly valued, the thought was that Bitcoin should trade similar to other technology companies, whether it's ARK and the portfolio or basket there, or NASDAQ. You'd expect to see a correlation there. And that's exactly what that showed, which was for a long time, it was like an 80-90% correlation to the NASDAQ, particularly right after the COVID period.
And that's not exactly what you want to see if you're saying it's a digital gold, basically.
That's certainly right. It's in the same way, you might not think that ARK is necessarily a unique investment because it's just a higher beta play on tech stocks. What you want to have when you're building a portfolio is you want to have things that are not super highly correlated to one particular asset. And so in particular, for most of us who hold 60-40 or something close to it, 60% stocks, 40% bonds, if Bitcoin is just trading like high beta stocks, that's not that helpful in generating a better portfolio of savings and investment over time. And so the real question is Bitcoin, or when does Bitcoin provide diversification benefit for the average or the everyday investor? And I think that's where the transition that we've seen over the course of the last 6 or 8 months, I think, is particularly interesting, because the answer in the post-COVID period was mostly no. It was not providing much diversification benefit. But I think what we're seeing this year is increasing indications that it may provide a diversification benefit.
Bob, just on that diversification benefit point, and it's still a very young asset class, especially to compare, say, against gold. Like gold was given to Jesus and things like, a long time. We've had some experience with this, right? And just when you think about a hard asset, you think, okay, listen, the idea here is I don't lose it all. It doesn't have these massive drawdowns. Just wondering if you've kind of looked at that, and just as it evolves and matures, obviously not through millennia, but just are we seeing some aspects of this maturation? And I think through your data potentially, but I just wonder on the downside, are we seeing like less of these drawdowns, as a characteristic per se?
Well, I think the volatility of Bitcoin is still extraordinarily high, and I think that that makes sense in an environment where there's still some ambiguity. I mean, not some, there's still significant ambiguity about whether or not Bitcoin is going to be digital money in the future, is going to be the incumbent money out of all of the different cryptocurrencies that may exist out there. And to be clear, I focus on Bitcoin here mostly just because it's the biggest one. Similar, you could apply similar approaches to all the different other currencies and tokens that are out there if you wanted to try and understand the macro drivers. I think that uncertainty continues to breed significant volatility. It's that volatility that is a little too high to start to get interest from institutional investors. They're not going to buy something that might go down 65% over the course of a year. It's just not, it's not going to play out that way. But what's happening is that volatility is basically, just because it's more volatile doesn't mean we can't start to extract what the drivers of that volatility are. And that, I think, the thing that's interesting, which is, is it closer to, 4 times NASDAQ, or is it closer to 4 times gold? The difference between those two things is a big deal when you're thinking about what the likely strategic value of something like Bitcoin is for investors.
I wanted to follow on that point because you have a really interesting way at looking at what the drivers are. There's a chart I'll throw up that's a pie chart. You look at it through a VAR or value at risk lens. For people who may not know, can you explain to our audience how this measure works, number one, and then what was it telling you through April about the drivers of Bitcoin?
Yeah. So this chart, just think about if you took all the things that drive a particular asset and you broke it down into the different pieces, here what you have is a series of different ETFs that cover various concepts, like USDU covers the dollar, or VGLT covers interest rates. I think what the goal here is to say each one of those different drivers has different volatilities, and we just want to normalize those volatilities because you don't really care exactly what the package is. What you care about is the sensitivity. And so I think what you see here over the course of a long period of time is that over the course of years, what you see is that the Bitcoin isn't really being driven at this time. This was as of a few months ago. We didn't really see Bitcoin really being driven by gold during the 12 months before. Now, I think the thing that's interesting is how that's changed, and I had some more recent comments on this, which is that sort of 1% that's being driven by gold. When you look at the most recent 3 or 6 months, that share has gone up a lot, and where it looks like gold is actually a much more substantive driver of what's going on with Bitcoin.
Yeah, now let's move to your latest thoughts, because you had a chart that looked at the latest correlations, and you said that Bitcoin may be starting to act more like gold. My question for you is, there's a lot in flux here, but do you think this increased correlation could just be transitory based on the current monetary conditions, or is this a healthy long-term development for Bitcoin?
That is the $64,000 question, isn't it?
Yeah, exactly.
I think
that's why you get paid the big bucks, not us.
Yeah, I think it's a structurally positive indication. It will probably, if you think about adopters of innovative technology or assets or anything like that, different people need different amounts of information in order to be convinced or confident that what they're seeing is the reality. And so I think in a lot of ways what this is showing is this is the initial steps of Bitcoin moving away from being just tech stocks to being digital gold. And if it persists, and that's, I think, really the point, if it continues to persist in this way, then I think that will start to attract a lot of interest. But it's not going to be over the course of weeks. It's going to take months or years before you start to get to institutional interest. But even just in the last 3 or 6 months, the fact that we're seeing that relationship, I think is pretty important. And I also say it's important to recognize that whenever you see relationships, you have to think about whether they're spurious or whether they're real. There are fundamental reasons why you might think that Bitcoin should trade like gold, in the sense that it is non-interest bearing money that is not controlled by a central authority. And so in the same way gold is non-interest bearing money, that is not controlled by a central authority. So there's good fundamental reasons why you might think that there should be a relationship. But the question is that playing out over time, which, I think we're gonna get a good cycle here over the course of the next couple of years that could really prove out the thesis if it trades that way.
Bob, let me quickly ask you, what would you need to see personally, or your firm need to see to begin allocating to Bitcoin at this point?
Well, I think for me, I remember it was a long time ago when one of the things I did at Bridgewater was head up the currency trading, and I looked at Bitcoin back years ago, and basically said, hey, I don't understand. This doesn't seem to trade consistent with macroeconomic drivers. And so, it could be a good asset. It could be a bad asset. It's not an asset that I understand in terms of what's going on in its day to day, which is fine. To be clear, when you're trading markets, you don't have to trade every asset in the world. You can just, there's certain, you want to have edge. And if you don't have the edge, you don't trade the asset. And that's no comment on whether Bitcoin's a good idea or a bad idea. And I think for me, part of the reason why I put together these charts and continue to explore it is I'm trying to understand, can I connect its movements, its activities, the supply and demand for it? Can I connect it to the macroeconomic drivers that I know and understand? When it comes to trading something like gold, I know how gold works, right? And fortunately, I've got 10,000 years of trading information on gold, so high sample size. Right. So, that I can be pretty confident about how gold trades. I can't be as confident about how Bitcoin trades, but I'm curious. I'm Bitcoin curious is what I would say. And so what I want to see is continue to see that it's connected to macro drivers over the course of, 3, 6, 12, 24 months. And then that's the sort of thing I could get a lot more interested in.
Got it. Now, before we let you go, I want you to tell people about what you're doing at Unlimited Funds, because it is very interesting and transformational. Could you tell us a bit about Unlimited Funds?
Yeah. I mean, I spent 20 years in the hedge fund business, basically running money for the biggest, most sophisticated institutions in the world. And I had this intuition about whether there was a way to sort of bring the hedge fund style strategies to the everyday investor. And in particular, using technology to see and understand what those managers were doing in close to real time, and then take that understanding and use it to select long and short positions in what backs an ETF. And that way it would be available for everyone, because I'm using technology instead of, star PMs and things like that. I could offer it a lot lower cost point. And so that's really, Unlimited is all about basically bringing sophisticated hedge fund style strategies to the everyday investor who would otherwise not have access to it, using our return replication technology. Our first product, the HFND ETF, is available out there. You can buy it on all the discount platforms. It launched 6 or 7 months ago and was the #1 independent, actively managed ETF launch of 2022. And that was a tough time to get into the business, but nonetheless, tons of great interest in the product. And so folks, over time, we're going to launch a whole suite of products across other hedge fund strategies. But if you're looking for a little bit of hedge fund strategies in your portfolio, check it out. And the beautiful thing about it is, whether it's one share for $20 or for 20 million bucks, you can invest in hedge fund style strategies at any size point, which is, pretty unique out there relative to what had previously existed.
Well, Bob, this is really fascinating. I feel like we should definitely get you on again and talk more about how you're setting this whole thing up, because, it hasn't been done before. So it's definitely very interesting to us. Now, everyone, I hope you enjoyed this conversation with Bob. It's been a great look from not a Bitcoin maxi talking about Bitcoin. This is the way you've been looking at other assets, and you start dipping your toe in and figuring out, does this make sense for me to build a diversified portfolio? So that was Bob Elliott. He's CIO, co-founder, CEO of Unlimited Funds. Thank you, Bob.
Thanks so much for having me. Really enjoyed it.
Thanks, Bob.
Awesome. All right, hard money.
All right, the train keeps going. Yeah, guys, don't go away. We've got a special guest, Shawn Khunkhun, good friend of the Grizzle family from Dolly, Varden. Stay tuned. Shawn! Oh, baby, a very special guest. We just had a great spaces with you last week. Shawn Khunkhun, CEO of Dolly, Varden, Silver. Shawn, how are you?
I'm doing great, guys. Thanks for having me on.
Thank you. Shawn, I got to start. Really, you were kind of like, your thought process. We did a spaces several months ago, which kind of was like really a big, it was a big driver to say, listen, let's broaden this tent. That we don't have to be warring families here, right? It doesn't have to be just gold and silver on one side, Bitcoin on the other. There's a trepidation from the precious metals community about embracing Bitcoin. And that's very clear. You have a very different take. Could you explain that to us?
Well, look, listen, it's a very simple take. My thinking is, I've been traveling all around the world for the last 20 years, attending mining conferences. And, what I noticed, going back to the early 2000s is, a big part of the crowd was in that 50, 60, 70-year-old category. There was a lot of bald heads and a lot of gray hair. And, my thinking, my concern back then was, what is going to inspire the next generation of precious metals investor? And, when Bitcoin first hit the scene, call it 2009, 2010, I didn't understand that that could be the vehicle. And it really was highlighted as Bitcoin, really built its notoriety, call it 2017 and then going into 2020. And it really inspired a new community, whether it's the Gen Xers or the millennials. And it's celebrating all the principles that we celebrate as a hard money asset for gold and silver. And so for me, I think, there's two ways to think about the world. You can either think from a scarcity standpoint or from an abundance standpoint. And I just view the world, I'm a glass half full kind of guy. And I think there's enough money out there and there's a lot of room. And these are two asset classes that investors should have exposure to both.
Very interesting.
Great. Great way to put it. And I think it's refreshing too, because we're one of the unique, if not the first conference to really bring them all under the same tent. We look forward to doing that more often. And Shawn, you carry a great flag for the silver camp and an open flag, welcoming to all generations.
Can't we all just get along?
Yeah. So we're potentially at the end of rate hikes from the Fed. I'd love to hear what your outlook for gold and silver is in that backdrop.
Well, the big knock on gold is the no yield knock, right? So when you're in a place where you've got no yield in treasuries, you can't really make the argument. But as the Fed's been raising rates and investors can get 4.5%, 5% on a 2-year note, it's harder to make that argument. But I would say, look, regardless if the Fed stops raising rates or they continue to, until their nominal rate is higher than the real rate of inflation, you're still losing money. If you're getting 4% in a bank, but inflation's running at 8 or 10, you're still losing 6%. So for me, it's glaringly obvious if the Fed pauses indefinitely, or heaven forbid they start lowering rates, we should see gold and silver prices spike. But I would argue, even if they continue to raise rates until we get to 10% or higher, I still think there's a really bullish landscape for gold and silver. And I would point to, the 1980s when, Volcker was raising rates, the gold prices doubled. In a 6-week period, gold went from 400 to 800 amongst the most aggressive rate hiking cycle in history.
That's a great point. Now, you've explained this really well when we've spoken in the past about the leverage of silver versus gold. Could you kind of explain that for everyone listening?
Look, I just think it's as simple as it's like it's like there's such a small group of silver equities, and it's so difficult to find ways to get into silver, and that's what makes it such an explosive category. And it's the same thing when we're talking about bullion. It's such a small market relative to major asset classes. It's tiny. So historically, silver companies have always traded, at a 300% premium to gold equities because it's such a small group. And then if you look at history, silver's outperformance to gold can be highlighted, as recently as 2020 when, the silver price went up 50% in 6 weeks. That same type of move took gold 13 months. And so, silver outperforms gold in a bull market. It's got tremendous leverage. If you think back to the 2000s, silver went from, call it $4 an ounce. It was $4.50 an ounce. It went to $49. So you could make 10 times your money in silver bullion versus, the move in gold, was 5X. It went from 400 to 2000.
Yeah, so it sounds like the moves are so quick. Playing cute is not going to work out for you. You need to have a view on silver, and you need to be owning silver, and then that play will happen, right? It's not trying to get in and out.
No, it's not the type of thing where you can't use the strategy of buying high and selling higher. You really have it is a buy low. It's not a momentum trade. You will miss it.
Mm-hmm. Got it. Now let's move on to Dolly Varden a little bit so people can understand, why we're so excited to talk to you, to have you on, why we've done spaces. Can you tell us a little brief overview of your assets?
Yeah, so we're in a part of the world that is, I'm a little biased. It is my backyard, so I'm a little biased. And there are some other great camps throughout the world. Witwatersrand, the Abitibi, and I can go on and on and on. But this is a part of the world that I think is in its first inning. Yet it is one of the most prolific and richest. Like it is literally the richest 20 kilometers for gold and silver in the world. So the backdrop is it's next level. It is 200 million ounces of gold are off of our property boundaries and about 1 billion ounces of silver. And I'm not even going to get into the copper or the other metals. What we have on our property is we've identified a very, very large, high-grade silver and gold resource, and we're just scratching the surface. This is an area that, used to be covered by ice, and it's an area that, never used to have roads or power or, infrastructure like deep water seaports. And so my goal is, when I look around the mining industry, there are companies that are mining ounces on a daily basis. Those companies need to replenish their mineral inventory, and my goal is to identify as much high-grade silver and gold in the ground. And I think what sets us apart from our peers is we're in a safe mining jurisdiction. We've got a large, high-grade deposit.
Now, I want to talk about your drilling program because you have an ambitious one. I mean, you had an ambitious one last year, but you've upped it quite a bit. You're planning to drill 45,000 meters. It would be helpful for us, and I think for investors as well, if you could help us understand how the goals for this year's drilling program differ or are the same compared to last year's program. Basically, what are you hoping to accomplish?
So if you go back, because this is an area that has been worked in the past in terms of it's got a rich 100-year history, right? But what we've come in and started doing last year is we've started putting a significant amount of capital towards the project in a disciplined manner. So, last year was a year where we had just acquired a big gold deposit north of our silver mines and deposits. And it was really a proof of concept year where we wanted to validate our purchase. We wanted to understand it. And it was a year that exceeded our expectations. And it was in the 100-year history of this area, it was the most successful drilling campaigns we ever had. It was ambitious. We drilled 37,000 meters, but we made discoveries. We actually made discoveries. So I'll give you an example here. We made a silver discovery that was the richest the property's ever seen in 100 years. We made a gold discovery that was the best gold discovery in the region, and it's a region that hosts some of the best deposits in the world. So this year we're stepping up, and we're drilling more. We're going from 37,000 meters last year. And actually, last year was a year where we only planned 30,000 meters, and we ended up drilling 37. This is a year where we've planned 45. We could drill more. We've got the budget to drill more. We've got the treasury to drill more, and we've got the targets to drill more. But to answer your question about goals, the real goal here is to make new discoveries and to increase the mineral inventory. That's the simplest way to explain it.
Got it. Great. Now, there's a good chart that I wanted to throw up, so I'm going to ask a question to it. Would successful drill results to connect your Wolf and Torbrit deposits provide the most upside to your resource of any of the drill targets in 2023?
Barring a, new discovery, I think this is where I feel most confident that, so there's a lot of areas. So we've got this, imagine a 15-kilometer area, and there's several gaps between deposits. But this is a gap, it's about 1.5 kilometer gap between the Wolf deposit and the Torbrit deposit. And Torbrit is a past producing mine. So I think this is an area where this could be the watershed moment. If we can drill, there's a fault that runs in between the two deposits. And if we can show mineralization on the other side of what's known as the Moose Lamb Fault, I think that'll be the breakthrough moment where the sophisticated silver and gold analysts and really the smart money will understand the significance of that breakthrough. And I think, there's a really, really good chance we do connect these deposits this season.
Great. Yeah, that's one I'll definitely be watching closely. Now, I wanted to ask you about your investor base because it is an interesting one. There's some big, well-known names on there. You have a relatively small number of large institutional investors on the cap table. So I have two questions for you. What do you think they saw in your company and assets that got them over the line to invest? And what do you think is the advantage of having a big name investor on the cap table when you're a miner?
Well, I think what initially got some of we've got a corporate investor, we've got a silver miner that's producing this stuff. That's one of the best performing silver companies in the last 3 years. And I think what got them over the line was just they've got a team that goes out and spends tens of millions of dollars every year looking to replenish their inventory. And I think what attracted them to Dolly Varden was they understand how rare this set of circumstances is. And that was before the acquisition and the new discoveries. So I think for them, it was really the project, and it was really the rare and unique opportunity of what we already have in the ground. And they understand that, the best place to look for silver or gold is next to an old mine. And then I think for some of the more recent investors, whether it's institutional investors that are managing, in excess of $1 billion, or it's a, very, very well-known, renowned precious metals investor like Eric Sprott. I think it's, for a lot of these investors, they really want to bet on a team. So if you look at our board of directors, if you look at our technical team, the scientists that really, drive value at Dolly Varden, I think these investors are really betting that this team, with their capital on this highly prospective project, is going to yield a right successful outcome.
Great. That's very helpful. Now, I just want to end it off with some key milestones. Over the next, say, 12 months, what kind of milestones is your team looking for? What should investors be watching from Dolly Varden?
Well, I've said this, and I don't mind repeating myself. So I'll say it again. This is all about, I view Dolly Varden as a bank, right? And I view gold and silver as money. And, if we're making discoveries or if we're making acquisitions and we're upping our bank balance, my goal is to have, as high a bank balance and to build that bank balance in a accretive way, in a non-dilutive way, so that we're limiting the amount of shares we're issuing in order to get maximum exposure for our investors of gold and silver. And so that ultimately, when the day comes where we go out and we take these projects into productions ourselves, or a larger company comes in and acquire us, we get the valuation of the largest resource. So if we can, when I took over this company, we had, call it 40 million ounces of silver in the ground. If I can get the company to a place where we've got 1 billion ounces in the ground, and we can be acquired for, say, $5 an ounce in the ground, that's where we're getting that $5 billion valuation for our investors.
Great.
Shawn, always a pleasure. Thank you for illuminating us, bringing the warring factions together. the man who's bringing the silver, the gold, and the Bitcoin. And listen, this is hard money. Shawn, thank you very much. Can't thank you enough.
Okay, thanks so much, guys, and what a great lineup of guests you've put together here. So I appreciate being on. Thank you.
Appreciate it.
All right, everyone, don't go anywhere. Hard money keeps going. You just heard from one of the fastest growing silver companies in North America. Now you're going to hear from potentially one of the fastest growing gold companies in the entire world. So don't go anywhere. We got Cerrado up next.
Nice back to back right here.
Everyone, welcome back to Grizzle Hard Money. Before we get into our next guest, remember, if you have any questions, this is a live event. You can ask them. We'll try to get them in front of the guests. That's the beauty of this format. So without further ado, I want to introduce Mark Brennan. He's CEO and founder of Cerrado Gold. He has a long history building companies across the mining spectrum, so we're excited to talk with him. Welcome to the show, Mark.
Hey, thank you very much for having me. Great to be here.
Now, Mark.
Thank you, Mark.
I want to kick things off. We all know mining is a hard business in the best of times. Could you outline the key aspects that you think set a good project apart from a bad one, say 2 to 3 points?
I mean, I think one is you got to find something that has scope and to be an exceptional project. We have a plethora of mining companies out there. Only a few of these projects are going to get built. You got to be exceptional. And so what we've done is we've had the ability to find what we consider to be exceptional projects. There are a lot of good projects out there, but they just have to have the right ingredients, low cost, big resource, and in the right jurisdictions.
Great. Now, for anyone who doesn't know Cerrado Gold, could you just start by giving us a brief overview of your 3 major assets?
Sure. I mean, we are a producer. We produced 50,000 ounces plus last year. Our target is to go to 70,000 this year, 90,000 next year. And then the following year in 2025, we'll bring in our development project, Monte do Carmo in Brazil, which should get us another 120,000, 130,000 ounces. So by 25, we should be producing over 200,000 ounces of gold. Not only are we looking to be a producer of gold, but a low-cost producer of gold. In Argentina, we're looking at 70,000 ounces this year, targeting something in the region of about sub 1,000 cost. All-in cost, and when we bring in Brazil, we expect that to be one of the lowest cost producers of gold in the world. So from that perspective, our focus and our total objective is to generate cash flow. That is our plethora of determination. So really, that is what our God is right now is cash flow.
Great, that's helpful. Now, you're guiding for basically a 300% increase in gold production over the next few years, pretty dramatic. Can you tell us the key contributors to that growth?
Well, it's going to be the right resource. It's going to be the economics on the feasibility studies that we have coming out in Brazil by the end of the month. It's going to require funding. But basically, we've been growing Argentina really well. When we acquired the Argentinian project MDN in 2020, it was producing 22,000 ounces. We took it up to 43,000 ounces, 54,000 ounces. This year, 70,000 ounces. So exceptional management team to drive a really tough project in a really tough environment under COVID. We'll use some of that same management team to drive Brazil. Again, we're going to be producing our feasibility for Brazil by the end of the month. We think the numbers will be very, very strong. And on the top of that, we hope to be in construction by the end of the year. So we're driving all fronts, the technical side, the monetary side, and the funding side.
Great. Now, I saw an interview you gave recently on the rationale for buying the mine in Quebec. I know that deal just closed today. And so historically, for people who don't know, they've operated in South America. They've now bought a mine in Quebec. And I thought it was very important that everyone hear Mark's rationale for why he bought this, because it gives you a little window into how he thinks about creating value and buying assets. Could you maybe just give us the rundown on Mount Sorcier, I believe it's called, why you ended up doing that deal that seems kind of different than where you've typically operated?
Sure. Well, first of all, I was brought up as a kid in Quebec, so we know Quebec very, very well. We know its advantages, its disadvantages. We also have there's an exceptional team at Mont Sorcier who built the what is now they had a strong contribution for the building of one of the largest iron ore projects in Quebec today, doing exceptionally well. And from that perspective, we feel very comfortable being in that jurisdiction. With regard to the logic that we had as a corporate on the corporate side was that it's a great asset. Basically, what we're looking at is it has many characteristics very similar to Champion, which is a $2-3 billion company. But also, what we're looking at is we feel that we can raise equity or raise capital for Brazil, which will generate basically, today's price is $150 to $200 million a year starting in 25. And then what we're looking at is, okay, well, what's next after that? And what we saw here and what the resounding explanation that we have is that if we determine to continue with the path of both assets, Mont Sorcier will look at the earliest of driving, we'll have to put cash towards that in 26 at the earliest, most likely 27, 28. And what that'll look at doing is it'll take up about 1 year of our cash flow from Brazil to generate, 20 years of $350 million of cash flow from Quebec. So basically what our objective here is, and again, I'm not saying this is going to be the end point, but I think it's a very good end point if that's our option.
This is the goal.
We end up being a company with 500 million plus of cash flow, with raising very little equity. Again, I just like Shawn, we really don't want to raise a lot of equity from the dilution perspective, but we can see ourselves through the cash flows of Brazil generating $500 million of cash flow in 28, 5 years time from now, where basically that would give you a company that's worth $2 billion, $3 billion, which would give you a 30-fold return on where we are today. For a 5-year investment, that's not a bad call with very little risk in the perspective that we know this asset well. It's a very simple project. There's infrastructure in place. So that was the logic that we had. That doesn't mean we're going to execute on that plan, but that is a great plan to have if I'm an investor purely looking at cash flows and how much money I can generate. I don't see many assets or companies that can grow at that pace with very little cash infusion from shareholders.
Yeah, that's the name of the game in investing, right? Nothing's a sure thing, but you make calculated bets, and this sounds like a pretty good calculated bet. So I like to hear all of that.
I think it's a great bet personally, but yeah, I mean, there's some people out there who are saying, well, you're no longer going to be a gold producer. Well, that's not true. Until 2028, we will be a gold producer. We will grow Brazil. We'll grow Argentina. And let's see how cards play as we move forward from there.
Great. Now, just moving a little bit more to Brazil, because that's your big next growth vehicle, the Monte do Carmo mine. Certainly looks like a world-class asset. I'm just curious, what are the key remaining milestones and timeline to get it to production? We have a chart on that while you're talking.
Yeah, I mean, I guess, the big thing is the feasibility study. We're targeting that by the end of the month. We think it's going to be extremely robust. As you saw in the PA, this is going to be one of the lowest cost producers of gold in the world. We continue to believe that that'll be the case. In terms of the next step will be the funding. I can tell you that we've already we started the path of funding in November of last year. We're down a very positive and a very substantive path that I hope we'll be able to announce before the end of the month or very shortly thereafter, that'll show people that we have a path to production. Construction, we expect to see we received our preliminary license in May, and we expect to see the construction license probably sometime in September. And we expect to be in construction in Q4. It'll be a 12-month construction cycle. We expect to be in production probably Q4 of 24, with 25 producing 130,000 ounces a year at a very, very low cash all-in sustaining cost. So from that regard, pretty exciting times ahead for us.
Now, I want to talk about the cost advantage of Brazil. It looks like it's going to be one of the lower cost mines to come on in the next few years. Could you just talk about the cost advantage of that asset versus other global gold mines?
Well, first of all, it's a very.
And Mark, maybe I'll just add before you also the return profile. Just if you could add that in, just because obviously that's a very very key point of the picture in the attraction there.
Absolutely. First of all, we're in a tremendous jurisdiction. I mean, it's one of the richest states in Brazil as a consequence of the very significant agricultural complex there. You have huge machinery, equipment, plants, all set up for the agribusiness. That implies, we have topography, which is very flat, a few hills, which is where we see our mineralization. But its infrastructure is amazing. We're 1 kilometer from a paved road. We're 5 kilometers from the major paved highway that goes to the capital of 300,000 people, for an hour away. It's just a great place to work. Likewise, on top of that, the actual mining operations is an open pit operation to begin with, which starts at surface. Very easy, ore. It's a very clean ore. We don't expect a lot of retention time or chemicals and such to be used. So from that perspective, it just has all the ingredients that bring to it its competitive advantage. On a capex basis, we can use an off-the-shelf mill. So from that perspective, we expect that the capex we had in the PA was 125 million. We don't see a substantial shift from there in the feasibility. With regard to OPEX, because it's a clean ore, because we have, it's at surface, from that perspective, we have all the advantages of bringing in a very low OPEX. On top of that, Brazil in general is a very cheap place to work. Compared on a global basis, you have the real, currently running at about 5.2 to 1. When I was working in building Largo, I remember coming to commercial production and we were running at 1.6 to 1. So the reality is that it's a great place and a great jurisdiction to work. You have all the infrastructure needs you need. We have a very clean, simple project, which always helps. So all those ingredients are what come together to make it just an exceptional project. And I will, unlike Shawn, who I like his strategy to go and get as many ounces as you can. What we want to do is we started with the ounces we had that we created, the 1.3 million ounces. And what we want to do is we are still a discovery project, but we're taking a little bit different route where what we're doing is we want to generate 150 to 200 million dollars of cash flow in the next couple of years, and all that money will go into the a lot of that money will go into the exploration to drive up those ounces. And we still think this is a discovery asset. We've only done work on a very limited component of our 82,000 hectares. We see a lot of analogous deposits and areas. So from that regard, we see lots and lots of upside, and we won't use all our money for exploration, but we expect probably $20 million a year, maybe something of that nature. But there's a lot of room for us to expand. But I don't want to be beholden to the markets in terms of relying on the market to go to the market and gain cash for drilling. I want that to come from our own operations.
So that's a very interesting angle. Great information. Now, one I want to ask you, there's no hard and fast answer. Maybe you're just the feel on things. It looks like Cerrado trades at a significant discount to both your net asset value, which is the fundamental value, and then also where peers are trading that are at similar production levels, similar type of company. What do you think are some of the key milestones that may help close that gap?
Well, I think everybody's waiting for Brazil, and I think in terms of when we get when we announce that we have a feasibility in place, when we announce that we have a funding solution, I can hardly believe that we will be trading at a discount to our peers. Many of our peers haven't done a feasibility. Many of our peers haven't funding solutions in place. So from that perspective, I think those will be two major milestones. One of the things we've always told our investors is we don't want to dilute. Management owns probably about 30 to 35% of the company today. The reality is we don't want to dilute. We think of this company as owners, not as management. And so what we're trying to do is make decisions that retain the long-term value for all our shareholders. And, sometimes the equity markets have been in a really difficult place for the last 5 or 6 quarters. The reality is that we found it more advantageous to work along the stream route. And as a consequence, we've given up a little bit on the asset, but at the same point, we've managed to retain a lot of the value to the company of the ownership of the current ownership. So from that regard, what I'd say to you is that we are going to retain that angle and not dilute this company as much as possible. If we can bring this company into a construction and then a production mode with very limited dilution, I think that's got to be a real big kicker. And I think I'm hopeful that we will give evidence of that in the next 2 or 3 months.
Great. Well, Mark, that was a really helpful rundown. You guys are, you're growing really fast. We're going to be watching you closely. For everyone listening, that was Mark Brennan. He's CEO and founder of Cerrado Gold. Thank you, Mark.
Thank you, Mark.
Thank you guys very much for your time. A pleasure to be here. Thank you.
All right, everyone, hard money. We've been doing some Bitcoin, doing some silver, doing some gold. We're going to bring it right back. We have an innovator in the ETF space coming up next, so don't go anywhere.
How are you? We are very pleased to have Mike Venuto, CIO of Tidal Financial Group. Mike, thank you so much for joining us.
Yeah, I'm glad we got the tech working.
Well, it's we're very fortunate to have you here. Obviously, we're talking gold, silver, and Bitcoin, and you have actually, it's an interesting time in the market. And we're going to get to some questions, but you sit in an interesting perch. The SEC is poking everywhere, but would love to get your take on that. But Murray, you want to lead with the first question?
Yeah, so before we get into it, I just want to kind of establish you guys have $6 billion in ETF asset under management. Can you tell us a bit about your products and the research you guys do?
Sure. So Tidal is, for all intents and purposes, we're known as like a white label platform. But I like to think we take it a couple steps further in that we offer the full stack. So there's no ETFs with the Tidal brand, right?
Right.
There's about 80 ETFs out there that we support in multiple different ways, either full stack, trust, marketing, compliance, sales, all that stuff. And then there's a number of ETFs that we also partner in economically. We'll come in and finance as a partner, never more than 49% because we want clients in a platform and all that sort of stuff. And I know one of the ones we wanted to talk about today was one of our first, what we call them diamonds, when we're a partner in it. So we're a diamond partner in the blockchain ETF, BLOK with Amplify. And we're also a diamond partner in the Bitcoin futures ETF, DEFI with Hashdex. So we get to touch this a lot. I love being on this because I consider myself both a gold bug and a Bitcoin quasi maxi. Excited to be here with you folks.
Maybe you could touch on that because obviously Block was, one of the innovators, and maybe just could you take us through just, how you built towards that?
Yeah, so before we launched Block, we actually had an ETF called TETF, right? And TETF was all the ETF companies, right? So the idea was, everybody agrees ETFs are growing, so let's buy Wisdom Tree, BlackRock, State Street, S&P, MSCI. The index still exists. It's on our ETF Think Tank website, but as a product, it didn't succeed, right? I think it's just because it seemed too nichey to people or whatever. At some point, I was on an interview 2017-ish, and it was at Market Watch, and they said, what's the greatest threat to the ETF industry? And I said, well, in 10, 20 years, everything's going to be on blockchains and everything's going to be BTFs, blockchain traded funds. And they laughed at me. And I was like, I got this. I need a blockchain fund. So it turned out we were working on it at the same time. Amplify was working on the idea. And this gentleman, Gabriel Rojo, was working on an index for it. We all came together and launched a product together in early 2018. It was a rocket ship. One of the things we decided to do was make it active. And I think you see that a lot more common right now. Funds that are in places that are innovative needing to be active because otherwise you get the name change problem, right? 50 years ago, Random Walk or Burton Malkiel wrote about how companies will just change their names to get included in an index. And when things are cutting edge, right, like AI, I'm sure we're going to see companies adding AI to their name, just like we saw companies add computer to their name or add .com to their name. In 2018, there was a company that was an iced tea maker that added blockchain to their name.
No.
I remember that. Oh man, what was it? What was the name of that one? That was crazy. It was
Long Island Blockchain. It's hometown.
Long Island.
One tasty drink though. That's a tasty drink. I like to have my hard water. Sip that right up.
Now you have companies going the opposite way. So like Riot used to be Riot Blockchain. They're now Riot Platforms because they want to be able to do more and it's easier for them to get banking relationships and easier for them to not have the ire of the SEC or whatever regulators by being a platform as opposed to only being blockchain. So there's this irony now that you have to do the research the opposite way.
Incredible. Now, just in terms of how we see it going forward, the SEC's targeted cryptocurrencies as securities. Just, how does that impact your world? Is it at all impacting, the ETFs you have in this space? Would love to get your thought and just obviously you have MicroStrategy. Just maybe just from a strategic CIO perspective, how you think about blockchain as a whole and particularly Bitcoin as it fits in there.
Yeah. So I was on a Spaces the other day, and I asked a question to I think it was Greg Foss. No, it wasn't Greg. It was somebody else.
We got Greg coming up. So.
Yeah, I was on one with Greg a couple of weeks ago, but it wasn't him on this one. But I asked the question, do you think that Gary Gensler is a maxi? Because it seems like everything he's doing is really forcing everybody into, this one spot. It was the Hashdex guys, actually, I was on with.
Yeah.
The regulators. So here's been my take for a number of years. We're all relying on the SEC to make the government stance on Bitcoin. And with all due respect to them, and I deal with them on a daily basis, their job is to protect investors based on 40 Act law, 33 Act law, things like that. Bitcoin is above that. So it's really, what I mean by that, it's bigger than securities law or commodities law. It affects monetary policy, right?
Yeah.
It affects all kinds of things at the highest levels of government. So I think it's silly that we've all been waiting for or hoping Clayton or Gensler is going to make a decision on what this is. I don't think that I think it's above their payroll, their level. I think it needs to come from Congress or the administration before they'll let, an agency that's really there for protections, not for policy, right? Like, there's no mandate for SEC to create policy. It's there to create protections and orderly markets. So that's kind of been my take now, because of kind of, Gensler having his hands tied. I feel like he's playing whack-a-mole, right? And going after whatever he can. For Block, it's hurt us on a beta, right? Because sometimes it slows the value. Most of our exposure to crypto is Bitcoin. It's not much else. Through Hive, maybe we have some Ethereum exposure. In terms of crypto, we have 4 Canadian spot Bitcoin ETFs in small amounts in the fund. We have MicroStrategies as an equity, and then we also have MicroStrategies bonds. We bought them when the last big drawdown. So we do some pretty interesting stuff to get our exposure. But Block is more about the technology, but Bitcoin's the biggest key to that technology. So we want to be the fund that has that exposure.
So would it be fair to say right now you're tilted more to Bitcoin than you would have, say, like 24 months ago or something like that? Is that fair to say?
So we have max weights on things, and we've been at our max weight on Bitcoin consistently. Where we've tilted in the last 6 months is we kind of came out of the more safe plays, the consulting companies like Accenture or Oracle or IBM that do use blockchain quite a bit, but not the publicly available blockchains they use, like private blockchains. I would say we hit out in those last year. This year we went from 10 to 12% miners to closer to 25% miners. That's where you get the most beta. That's why we're having a rather stellar year in terms of performance. And it hasn't hurt that the semiconductor companies are in the AI wave. But
of course,
the Bitcoin miners have got something new, which is, with the ordinals, they're now making not only money mining, but they're also verifying transactions. So there's a little like extra kicker there that people really weren't predicting.
Great.
And so wrapping up here, just big picture, where do you see a demand for ETFs heading in the future?
Mike, you're at the center of it all. You see it all. Talk to us, right? Like you're the chief. Yeah, you know you're like an independent label boss. Yeah. Death Row Records of ETFs.
It's funny. I have a music ETF coming out next week. So with the ticker Tune. So I'm excited about that. What I've seen is the rule in the United States that changed the ETF market the most. Everybody thinks it's the ETF rule, which definitely helped. It definitely leveled the playing field for active on taxes and stuff like that. But then we had this rule 18F4, which is called the derivatives rule. And the impact of that has brought all kinds of complex, interesting products to market, usually using options, derivatives, swaps. So, I would say growth phase 1 for ETFs has all been Delta 1, one time the market. What we're seeing now is Delta 2, Delta -1, Delta 2.5, yield generating. One of our biggest hits this year has been Tesla. So we did this with the Yield Max crew. It's long Tesla, sells calls. The yield has been anywhere from 30 to 80%. Just vol harvesting Tesla, right?
Nice.
It's crazy. So yeah, I think the future is more complex products, and more outcome driven active management.
Mike, can't thank you enough. Always, a pleasure. We last time we spoke was when we had Meb on. It was a Spaces, and that was very insightful, and always excited to keep but we got to do another Spaces, but let's keep hearing about your fantastic lineup of ETFs. I look forward to it.
Yeah, I was actually with Meb in LA yesterday, so I traveled 12 hours in the last 28.
Hey, so, aren't you in New York with Meb too? Are you guys on tour? You guys on that?
Yeah. So I do want to tell everybody too, you're coming on our show later today at 5 p.m. East. Get Think Tanked. Is the place to sign up. And I asked Meb to join us too, so we'll see if he's able to jump on. Yeah, so
very nice.
We should have a good time.
That'll be a lot of
later
fun
today at Get Think Tanked. Yep.
Yeah, guys.
Awesome.
I've retweeted that, and I'll retweet it again. That's at 5. Please join us. We got Meb, Mike. It'll be it's a proper drinky drink. Let's have fun. I bought some drinks for it. I'm gonna be loaded.
Yeah. That sounds like fun.
No. Anyway, well, after this, but Mike, thank you so much. Really appreciate all the insights, and look forward to joining you in a few hours.
Sounds good. Enjoy the rest of the show.
Mike.
Tell Greg hi. All right.
All right. So that was Mike Venuto, label boss of the one and only Tidal ETF. And so the train keeps going. We got another fantastic guest coming up next. Very unique, interesting take on the gold market. Stay tuned.
Stay tuned.
Wow, there's some energy in that intro. I'm ready to go to a concert. I don't know, not do an interview, but let's you got to keep the energy up. That's the hallmark of Grizzle Hard Money. So,
well, you know what? This started as gold, silver, Bitcoin ETF, and apparently we just got the release of a brand new music ETF. That was a couple minutes ago.
All right, you heard it first. So now I'm excited to have this guest on because they're creating a technology that could actually revolutionize the mining of precious metals. So we're excited to have Mark Thorpe. He's the founder and CEO of Enviro Gold Global. Welcome, Mark.
Yeah, good morning, everybody. Thank you.
So, Mark, you have an extremely unique business model among our speakers today. For anyone listening who doesn't know what you're building, could you give us a brief overview of Enviro Gold?
Sure. We're recovering precious, strategic, and critical metals from tailings. Our particular focus is with complicated tailings, which is mine waste, and we've got something that nobody else has right now.
I like that. So can you tell us the history of Enviro Gold's technology and your work on mining sustainability? What does your technology do that hasn't been done before? And just quickly on your patents, like, are you comfortable with your patents? Are you trying to get more of them? Kind of lay out what the technology is all about.
So I'll start with the patents. We're very comfortable with the patents. We've got a team that's actually had many patents patented in the past, and we are developing some new ones. It's really interesting. Our technology essentially liberates metals that are not previously recoverable. The beauty of it is it takes some existing technology for leaching, and it operates it at lower temperatures and pressures than is normal. What we're doing is we're taking complicated pyrite tailings, which is as fool's gold for anybody else who's not a technical kind of person, and within that, the metals are trapped. So what we do is we dissolve and destroy the matrix. It allows us to recover the base and precious metals in a conventional way. It's a really exciting approach, and it at the same time reduces the environmental liability associated with acidic drainage in the tailings. So win on one way because we work with the owners of the tailings to liberate the metals and make some money, and win for the environment because we reduce the environmental liability associated with that particular site.
Yeah, that's what's really interesting about how, these are uneconomic metals in tailings, but then you can make them economic, and so they're not just sitting there polluting the world. So I like that.
Yes.
Now, I wanted to ask you a business question. So you're not in the business of creating a mine and mining materials. You work with other miners. Say you have a signed contract in place to work with someone. What are the next steps you have to take to go from contract to production and cash flow?
We use a fairly standard model for the mining business. We'll take the tailings, and we'll have probably previously tested some of the tailings. We'll go through metallurgical testing in the lab. We have our own lab in Brisbane, Australia, and we work with commercial labs like ALS and Core. Do exactly the same as what we would normally do. Get an understanding of how to get the metals out, work through a PEA and a PFS, and if and when the PFS looks positive, then we move on to a DFS, finance and construct the plant. It's a fairly conventional approach. The piece that's interesting for us is that we're taking a technology that was once through, and you kind of went from one side to the next. And what we're doing is we're recycling most of the catalysts that are required for the reaction to take place. And that's the secret sauce in the case of Enviro Gold. We take that recycling very seriously, reduce the overall consumption of reagents, and that makes it more profitable for us.
Now, I wanted to talk about in March, you released important preliminary test results that showed 75% to 90% recovery rates of various precious and battery metals. And so that project had a net present value estimate of about 144 million Canadian, and that's at 1,650 gold or so. Now, that's obviously much higher than your market cap today, which is around 35 million. So can you just give, for everyone listening, like, what did that kind of report tell you? What did it mean for your company?
So for us, we've worked for the past 2 years with Core Resources Lab out of Brisbane, Australia, which is a well-renowned metallurgical laboratory. And then we started working to develop our pilot plant at ALS. All of the work that we'd done previously was validated by this independent testing at ALS. What it says is that our model is valid. What it says is that what we expected in the lab is what we're finding now. and we're very excited to have the pilot plant running. And the pilot plant, again, will further validate the process. There's a series of stages that you go through on these metal recovery processes, and each one is validating and de-risking. And for us, the March results just de-risked our process another step further. So
great. Now I want to talk about your first commercial deployment, as you mentioned, the Hellier Gold Mine. What are the key next steps for the commercial deployment there, and what is the current operational status of the mine?
So Hellier right now is they're reprocessing some of the tailings using a flotation. They're not getting the gold and the silver out, which is what we're primarily after. They're getting about 5% of the gold and 30% of the silver. We'll go up and we'll up that to about 80% of the gold and 90% of the silver. The deployment where we're at right now will finalize the work that we're currently doing on the pilot plant. Then we will update the technical report, which we issued last year. And I expect to get that update to the technical report out in the next month or so. And then we'll move on to the DFS, finance the project, and get on with building it.
Great. Now, also, you announced some big news very recently, actually, a memorandum of understanding with Hindustan Zinc, which is a $15 billion market cap company. And that was they wanted to test your technology on their waste streams. Can you take us through the timeline of when you think you could have test results from that? And then also, if you're successful, would that be important validation of your process for everyone else who's been looking at it?
This was amazing news for us. When we first chatted with them, I knew they were a big company, but we didn't realize they were quite that big. As we worked through, it's a different approach that uses our technology. So what we're doing here is we're validating our technology on a different type of waste stream. It's really exciting. We should have results in Q3 this year, the preliminary results that we're testing on the jarosite. We're excited to be able to validate it outside the conventional model. And what this does, it really opens up the opportunity more globally, particularly associated with smelters and particularly associated with very rich waste streams in the zinc and silver area. So we can expect results in Q3. And if we're successful on that, then we will go back and we'll work with HZL to implement the next stages.
Now, overall, what do you think potential partners are looking for as far as technical validation to commit to large scale, to have a Vale or just someone big come in and say, I want this in dealing with all of my waste streams?
It's very much focused on the success that we've been able to prove in the lab. When we first started working on it, we had a very, very sharp focus on the Hellier project and obviously proving up the process, as we're continuing to do as we advance that particular project. As we step out to other types of sulfides, for instance, as you mentioned, like a nickel sulfide or the zinc sulfides that are at Hindustan, we're able to increase our potential market. What the larger companies are looking for is lab validation and the preliminary recoveries that we've been able to get. Once we show them that, then they're willing to take on our process and work with us to implement. Initially, it would be a pilot plant, probably at their own sites, and then full-scale production.
Great, exciting. Now, I've read that you have two business models you could go with. You have profit sharing from your modular plant, or you have licensing. Which would you prefer long term?
I think we have to do two things. The first thing is we have to get one of our plants up and running, and that's probably going to be a profit share model like we're doing at Hellier. We need to show the world that this is not just a lab scale piece. And then for the larger projects, obviously, it would be preferable for us to then move on to do a technology licensing, somewhat similar to Glencore's approach with the Albion process. So in our case, we'll be able to do one of the two models and then move over to a more licensing model once we get further down the track.
Got it. All right, that's very helpful. Your deck says you have $5 billion of pipeline partnership opportunities ahead of you. Are you having conversations with other potential test partners beyond what you've announced?
Yes, we are. We're very we're very busy right now negotiating contracts. My team and I are working on the second project, and we're also in conversations with another large mining company in Canada that has an interest in recovering some base metals, strategic and critical metals from their tailings. I think the biggest thing that we're finding is the environmental liability associated with these tailings can be quite high, and the closure costs can be quite high. But by implementing the Enviro process, you're able to, one, recover the metals, two, reduce the environmental liability, and three, keep the plant in operation going. I mean, it's some of these big projects that we're looking at are 25, 30 years, great employment for local people, great reduction in environmental liability for everybody, and everybody makes a little bit of money at it.
I love it. I mean, busy's good, right?
You're busy is very good. Yeah, my team is amazing, and we're keeping them hopping right now.
Yeah,
great.
Now, Mark, this has been really interesting learning more about this. It looks like you guys are really at the ground floor of something that could kind of change the industry, which is interesting. How about we end it off with potential catalysts? You've talked a lot about what's coming next. Can you just kind of wrap it up for everyone listening? What should we look for over the next 12, 24 months?
Oh, well, we'll be completing up the update to the technical report on the Helia project. Obviously, we'll be putting out the results from the Hindustan Zinc. We will then move on for the Helia project. We'll move on to the definitive feasibility study. We've already selected our engineering company. We're working with Sedgman, a very large and well-renowned international engineering company. And then we'll have an investment decision at that point, and then we'll start the construction of Helia. We also expect to be able to announce another MOU, which will bring us onto our second project. So a very exciting few months. I would say we'll be in production next year, and we'll probably have the second project up and running by 2025.
Exciting times. All right, everyone. That was Mark Thorpe. He's co-founder or founder and CEO of Enviro Gold Global. Mark, thanks for being with us today.
Yeah, very interesting technology indeed. And thank you, Mark. Always fascinating.
Yeah.
My pleasure. We'll see you when we've got the results from the pilot plant.
We can't wait.
That's a big one.
All right, everyone. Hard money. We're not done yet. I hope you're not going anywhere. Remember, no eat, no sleep till hard money. That's how we do it. So we've already talked to some gold companies, talked to some silver companies. We have another gold company that just did a transformative acquisition. This is going to be a really interesting one just from a business case study. They're going to walk us through what went wrong for the prior operators and how they're turning things around. So you don't want to miss this.
Yeah, it's a good one.
How are you guys?
Amandip, how's it going? We've got Amandip Singh from West Red Lake Gold Mines joining the Grizzle Hard Money Conference. Man, we're bringing them all together. We're the gold, the silver, Bitcoin. Amandip, thanks for joining us.
Super exciting, guys. Thank you so much. I've never done one of these online conferences like this, and it's just I guess maybe this is the direction that we're taking moving forward. Innovation, I guess, right?
This is the future, my friend, and we're your Sherpas. We're your online Sherpas.
Yeah. What a time to be alive.
Yeah, exactly.
Now, Amandip, I'm excited to talk to you guys because you just did a transformational acquisition that's going to basically change what West Red Lake looks like. So can you tell everyone listening what you're buying?
Yeah, absolutely. And transformational. It's one of these words that everyone throws around, because it's punchy. But I think this is textbook transformational. If you look at it, before we got into this transaction, West Red Lake, a wonderful asset that we had, our Rowan project. But just if we talk hard numbers, we went from 830,000 ounces to now 3 million ounces on the book. So we've tripled our resource. Our land package is doubled. We got a fully permitted mill, 800 ton per day nameplate capacity there. We look at some of the other things that came along with it. Just some robust infrastructure in the area, and the asset that we bought. A lot of people are familiar with Pure Gold, the previous operators there, and at one point in time, this asset, it commanded north of $1 billion valuation, and I think our team, we saw a real opportunity there, and we hope to capture all, and if not more, of that peak valuation, and really create some value for our shareholders in that Red Lake area.
That's helpful. Now, you put a slide in your deck that I loved as an investor that went through some of the previous operator challenges and how you plan to fix them. Could you just walk us through? So tell us some of the things you think the previous operator did wrong, and maybe what do you think was their worst mistake that eventually kind of led them to an outcome that they weren't very happy with, probably at the end of the day?
Yeah, certainly. And I do want to preface this with, we're not in the business of speaking disparagingly about people that came before us, right? There are certain challenges and obstacles that they may have faced that we didn't have, and that's not the purpose of this. But it's like you mentioned with when you go out there and you're buying an asset out of receivership or a distressed asset, there are those conversations and those questions that what are you going to do better? What went wrong? And during our DD process, we inherently did a deep dive, and we looked at it through the investor lens before we went into this, and we asked those very hard hitting questions. And there was a lot of amazing, phenomenal things that the guys before us did. I mean, when you look at the mill, it was just absolutely pristine. Some of the best, some of the best engineering we've seen in a long time. But I think when you take a step back and you look at what had happened, the previous operators, you win developer of the year, you become, like the prettiest girl at the dance, and you had so many suitors, and there was like this big pursuit of a sale. They were embroiled in the sale process, and everything that their operating culture and everything from how they financed it, it was all geared towards a sale process. And I think when the valuation started getting away and that sale process didn't happen, there were some very restrictive debt covenants on the back end that they had to fulfill, i.e. putting this project into production on a very specific day. And I know we all aim for on budget, on budget, on time deliveries, but oftentimes that can handcuff you to some decision making that you would have done differently otherwise. And when we talk about that, just from the project financing standpoint, when we acquired this, we were able to put a 1% royalty in favor to Sprott Resource Lending. A big project like this, you seldom see these not have royalties on them. But again, you don't encumber it with a royalty to make it more attractive to an eventual sale. A lot of things that were supposed to be CapEx, they were pushed out into OpEx. Things like primary crushers, they were rented, right? So when you looked at the operating history of the mine and the production costs remained relatively high, it's because they just kicked that expense that should have been done day one they kick that can down the road, and you just never catch up with that that sort of you never catch up with the right production numbers there. Additionally, you're so focused on a sale, you don't think you're going to really be running it for a long time. There was no stockpiled ore. So and then you know what? It was during a time of we all know that the dirty C word, COVID, when that happened and we were all shuttered into our homes. COVID happened. Renting your equipment, there was the availability of consumables was not there, so that derailed production, and there were several months of production that just they didn't manage to do. So the mine, it still needs money whether you produce gold or not. And I think these are just a few of the things that contributed to the overall situation that they had to deal with. But there was a turnaround that was happening. If you actually look at the last production month at Madsen, that was the August 2022 production month, things actually were turning around. The grade was going up. And grade's important too in terms of one of the things that contributed to this: on time, on budget. You source ore closest to surface. Unfortunately, the ore closest to surface here is also the lowest grade. So a combination of all those things.
Got it. No, that's really helpful. So it sounds like, again, as everyone understands, debt can be a blessing and a curse. You're on the clock once you take out debt. And so they ran into COVID, they ran into other things. The timeline just didn't work out with when the debt was due. So that's a difficult situation.
Absolutely. And you mentioned debt, and just along those lines, one of the things that I always say is, in this business, there's two luxuries that people are not necessarily afforded at the same time. And those two luxuries are balance sheet and the luxury of time. One of the questions, like, what are we going to do better? What are we going to do differently? Well, right off the bat, one of the beautiful things about getting an asset out of bankruptcy is you come out on the other end without those liabilities and debts. So right off the bat, and we just raised a considerable amount of money in our last financing. So balance sheet, we have the ability to raise money. We've got a really supportive group of shareholders in the mix. And when you look at the luxury of time, there is no restrictive debt covenant there that's telling us to put this into production on any specific day. So we will go back to first principles and take what was a producing mine and really take a step back and become an exploration development story, de-risk that resource, drill it more adequately and come up with a significantly de-risked resource, and then start thinking about restart planning and execution. So, that's kind of our secret sauce, if you think about it, the luxury of time and luxury of balance sheet.
Now, I want to dig in a little bit more on what the next steps for the Madsen mine are once you close the deal. Kind of what do you think you're going to be working on the next 6-12 months?
Great question. So that deal, we are, we should be closing that deal very imminently. And then, I think our like I said, our first steps there is, so cost improvements. So, we bought an asset. There is a inherent burn. So we are trying to bring that monthly burn rate down to the very minimal level it can be, such that it maintains our permits and we're well within any sort of water usage guidelines. Again, right? One of the biggest value drivers of this acquisition is the nature of a fully permitted operation, and we're going to do everything to keep those active. So there's a cost improvement exercise we're going to be undertaking. We've brought in a phenomenal team of exploration geologists that are led by Will Robinson. He was a new hire. He's our VP of exploration. He comes to us from Coeur. So they are going through with a fine-tooth comb at all the areas that we can find potential upside. So they're coming up with some really prospective exploration targets. And when those targets are in fact developed, and not just near mine, right? One of the things you look at with the big opportunity here, most of the drilling was in and around the mine, but on a regional scale as well. There's 47 square kilometers. So we're going to get those, have those targets, prioritize them, and then start drilling away. I think our focus is going to be 70% of our drilling is going to go towards resource expansion, so new areas, not within the existing 2 million ounces, and then 30% of our drilling is going to be focused on infill, just giving us that higher level of confidence in what it is that we have.
Now, it sounds like there's some potential synergies between Madsen, which is your new acquisition, and the Rowan mine, which you already own. Could you talk us through your thinking on how these mines can work together?
Yeah, certainly. And, if that's, one of the reasons why I think our group was also in a position to get this deal done was, we didn't come to the table with nothing, right? Our Rowan project is, it may be under the, the shadow of the Madsen head frame now because it's such an exciting project, but it was a wonderful project to begin with. There's, 832,000 ounces at 9.2 grams, which that's high grade by even Red Lake standards. So when we came to the table, we didn't come empty handed. We are bringing this asset, and it's, we think it's going to play a big part in the future of whatever stage development approach we take. There's a drilling campaign that's ongoing there right now. 17,000 meters of drilling is underway during a phase 1 and phase 2 program. And when you look at the existing resource, there's about 22,000 meters of drilling that went into that. So in our first season, we're doing 17,000 meters of drilling, which just gives you a sense of how important we think Rowan will be to the future. The nature of the ore, very similar to what you're seeing up in that area, that sort of Archean greenstone hosted gold mineralization. It's 15 kilometers as the crow flies, but about 85 kilometers by haulage roads. So we will look for ways that have ore feed from there, feed into our Madsen mill. But again, these are studies that we're going to do as we move on. But definitely there are synergies there that we can be exploiting, especially the Madsen mill. It's 800 ton per day nameplate capacity, but with modest investment, you can upgrade that to 1,500 tons per day. So we think the Rowan project will really feed into the future of this company.
Great. Yeah, I love that chart. Puts it in perspective. Now, you've outlined you guys have a lot on your plate. There's a lot of, obviously you're going to be busy the rest of the year. Could you kind of help investors understand what we should be looking for catalyst activity over the next year? What are some important milestones for your team?
Yeah, certainly. And again, we will be busy, a lot to do, but at the same time, it's a lot to do, but it's a very simple story. So not to confuse people, but I mean, as I mentioned, there's a phase 1, phase 2 drill program happening at Rowan. Those drill results are rolling in. We actually did have a drill release a couple weeks ago that came out. Some very stunning, spectacular results out of Rowan, reconfirming what we already know and adding to that narrative. Obviously, we're going to close the transaction, so that's news. If you noticed, we've got a new captain in the seat. We brought Shane Williams over. We were absolutely fortunate to have a guy with his background and pedigree, kind of directing us. So he came in as CEO. Duncan Middlemiss was appointed as a board member. We're going to have some more board appointees moving forward. So on that regard, from a corporate standpoint, a lot of updates on just kind of demonstrating the vision of this company. Like we are, really here to compete with, any of the other premier people when it comes to our team, to our board representation, to our project. And then obviously we do need to, describe to the market with more granularity as to our exact plans on how we plan to execute our vision at Madsen. And then, you'll have mobbing in, mobbing out of Madsen, drill results. We might be doing a bit of development on our ground there just to help our cause. But all of these things, like we do not believe there's going to be a void of news for the next, between corporate updates and site level updates. This is, this is certainly a movie you want to keep watching.
Yeah, it's an exciting project, so we'll be watching closely as you develop this and see, where it looks like it has a ton of potential as it did in the past, and so hopefully you guys are going to realize that potential. So everyone listening, that was Amandip Singh. He's VP of Corporate Development at West Red Lake Gold Mines. Thank you, Amandip.
Guys, thanks a lot for having us. Really appreciate you guys.
Thank you very much. And that's guys. We've had a fantastic group of gold and one silver. We got another silver coming up, Scott.
Yeah. What I love is it's the strategists and it's the guys getting the precious metals out of the ground, and you have big investors who actually could put money towards Bitcoin if it made sense. That's how we do it. We put the whole gamut together, give you guys a holistic view on things. Don't go anywhere. We still got some great guests. We have another silver miner doing interesting things in some big silver areas of America this time. We'll be right back. All right, everyone, welcome back to Hard Money. Hope you guys have been having fun. We've had some great guests, learned a lot about silver and gold and Bitcoin, how it all fits together under that hard money banner. But we're not done yet. We're joined by a silver miner, Summa Silver. They're doing some interesting things in America, of all places. So we're joined by Galen Mcnamara, he's CEO of Summa Silver. Thanks for being with us.
Yeah, hi guys. Thanks for having me back on. And I'm joining you today from our project in Tonopah, Nevada, about 3 hours north of Vegas.
Very cool. Very cool. Now, Galen, I just want to start things off. Could you give us a quick overview of your assets for people that might not know the company?
Yeah, so that's, of course, the best place to start. Summa Silver is a company that I founded about 3 years ago with the idea of focusing on these historic Wild West, like prolific past producers that haven't really seen any modern exploration. You find that when you go into these districts, there's oftentimes a lot of low-hanging fruit left if you apply a modern focus to discovery. So we've got two projects. The one that we're drilling now is here in Tonopah, Nevada, about 3 hours north of Las Vegas. And you know what a lot of people don't know is that Nevada is the silver state. And that's because of places just like this in Tonopah, was the second largest historic silver producer in the state of Nevada, produced something like 175 million ounces of silver, give or take 100 years ago, and hasn't had any modern exploration. So that's where we've stepped in over the last 3 years and drilled a lot of really good high-grade holes and are really starting to show that there's still a lot left to give in this place. So that's one. The second project is in southwestern New Mexico. It's called the Mogollon Mining District, and it's very, very similar to the things that the Spanish mined going back 500 years in Mexico. We've drilled fewer holes there, but again, similar type of high-grade success where we're going in and finding that the place still has a lot left to give.
All right, next, could you just provide investors with a bit of background about your team and their experience in the mining industry?
Yeah, so I'll start with myself, Galen. I'm a geologist going back about 15 years. I've always been really focused on precious metals just in general, mostly in Canada and now in the US. But between 2014 and 2018, I managed all the drilling for Next Gen Energy. And we, of course, had some very large successes in uranium in the Athabasca Basin. Our VP Exploration, Chris York, he's a guy that joined us from a major mining company called Hecla about 2 years ago now. So he was managing a lot or all of their I'd say a lot of their Nevada exploration, kind of our man down here in Nevada. There's another gentleman, Chris Leslie. He's one of the guys that discovered the Blackwater gold deposit in British Columbia, something like 8 million ounces of gold now. But anyways, I think, big picture, kind of small or big picture. We're a group of mid-career, mostly geologists that have had some good successes in the past, and now want to do it again.
That's great info, helpful. So, I noticed that there was a recent Fraser Institute survey that was done by your mining peers, and it ranked Nevada, where some of your key assets are located, as the most attractive region globally for mining. Can you tell us about some of the key benefits of operating in Nevada?
Yeah, Nevada, every year it's either 1, 2, or 3 for as long as I can remember. And, unless you work in the mining business, you might not really get that. You think of Las Vegas, but it's actually a very, very large gold producing state. I think if it were a country, it would be the 4th largest gold producer in the world, or something like that. So people here understand mining. The regulators understand the process of permitting and understand the mining process. and it's just a place that's just open for business. And it really understands the positive impacts that modern mining can bring when you marry, let's say, prosperity with good environmental stewardship and good community engagement.
So you told us about Nevada. That was a great overview. Now, how is New Mexico? That's another operational area for Summa. How does that compare to Nevada, similarities and differences?
Yeah, well, New Mexico is a place that has a rich mining history. There's two fairly large open pit copper mines that are in operation right now, about an hour's drive away from us. But there's generally less exploration there. There has been less exploration there over the last several decades. So what that really means is opportunity. I like to say that it's really quite underexplored. There's lots of great potential for new discoveries, as we're showing, in our Mogollon project. And then there's a great regulatory environment there with very, very strong permitting agencies.
Great, that's helpful. So you believe the Mogollon district in New Mexico could be one of the great remaining vein fields left in the United States. Could you tell us the history of the asset and what you see there that's getting you so excited?
Yeah, well, it has a very, very interesting and rich history. The area was discovered in the 1870s by a guy in the U.S. Cavalry who kept the discovery secret until he left the military, and then he went back there and staked the claims himself, I think with his brother, and started a little mine. These things kind of go in waves as metal prices go up and down. But it produced between then and 1942 and only shut down in 1942 because that's when World War II started. So that's when all silver and gold mining in the United States stopped by law. Between then and the 1970s, not too much happened. Land fragmentation, as I call it, is often a problem where, this guy owns this little claim or this guy's grandpa owns that little claim. So putting it all together can be really difficult. But in the 1970s, that was done by a geologist named John Livermore. And this was the guy that found the original big gold deposits in Nevada for Newmont, like back in the 1960s. So he really liked the area. He put it all together himself. And then he drilled it himself. And when I say he drilled it himself, I mean he drilled it out of his own pocket. So, he had some really great results that, by our standards now are awesome. And they were then too. But at that time, everyone was looking for the next big open pit copper deposit in this area. So nobody really cared about, silver and gold in this context. But of course, now things have changed. And that's really where we've stepped in over the last couple of years, following up on John and his very strong colleagues' work as well, and kind of building out from there. So to put things in perspective, we've drilled over a vein over a strike length of 500 meters, half a kilometer, and have intersected some really strong grades, and there's some very, very wide intercepts. But in total, there's 50 kilometers of vein on the project. So, we've really drilled 1% of it. And, I think that it's not all going to be mineralized, the entire thing, and we don't have 100 times more drilling to do, like nowhere close to that. But it just helps put into perspective, what these things can hold, when they get to be truly world class.
Now, so you just actually put out a press release recently that you had some initial metallurgical test work came back positively on your samples from the Mogollon project in New Mexico. There's a ton of good detail in the press release, but because I have you here, I wanted to hear from you what your key takeaways were, what the team's key takeaways were.
Yeah. Well, you know what? Like, just thinking of, if you're looking at any mining project, a key question to ask is, can you get the silver or gold or uranium or copper out of the actual rock, right? Because if you can't, it doesn't matter. It doesn't matter what you have. So our results for silver and gold, and we have silver and gold, 97 and 98% recoveries. Is in my experience remarkable. Anytime you're north of 90 on silver, that's very, very strong. And north of 95 on gold, very, very, very strong. Now, these results are preliminary, but it just goes to show you that, these things really, these types of deposits, metallurgy is very well understood. Humans have been getting silver and gold out of veins for, hundreds or thousands of years. So it's, we're not trying to reinvent the wheel here, and things are looking good.
Now, moving on, my next question is, what are you hoping to find with your Hughes project? And can you take us through, you have a pretty helpful slide from your deck that compares the Tonopah district in Nevada to other prolific districts with similar geology in Mexico. Maybe you could walk kind of everyone through that.
Yeah. Well, that's it. When I first was looking at this project and deciding if I wanted to work on it or not, I thought to myself, okay, Tonopah, Nevada. Well, how does this compare to the famous Mexican mining districts? Like I was saying, that the Spanish and even indigenous peoples before that were mining going back 500 plus years. Well, Tonopah has a strike length of 4 kilometers. The old mines have a mined length of 4 kilometers and produced 175 million ounces of silver. But if you compare that to, say, Guanajuato or San Dimas, or places that in Mexico have produced much more, well, they've produced over, say, twice as long or more, 7 to 10 kilometers, and 1 billion ounces of silver or more in some of these cases. So I just thought to myself, okay, well, we've got these great targets east of the district. We hit on a 1.5 kilometer step out when we were working on the project in 2020. So if you take that 4 kilometers that produced in Tonopah, add 1.5 kilometers onto it, where we're starting to hit on what we call the Ruby discovery, and even let it run further out, I mean, it fits in quite nicely with how big these districts can get when they get to be truly world-class.
All right, that makes a lot of sense. All right, so moving on to the last question. What are the key upcoming catalysts you think investors should be looking for with Summa?
Yeah, well, us, I'm very happy to say that, even in these markets, we're very well financed with about $10 million in the bank. So that means that we are loaded for bear, in terms of ready to drill. So we've got a program here that's going to go on in Tonopah in Nevada for about the next month, chasing some really strong exploration targets. And then we plan to return to New Mexico and just keep stepping out from where we already know there's mineralization, keep following up on that work from the past. Well, we just build ounces very systematically and very methodically.
All right, everyone, that was Galen McNamara, CEO of Summa Silver. It looks like you have a unique model for finding silver and gold, so we'll be watching you guys the rest of the year closely. Thanks so much for being with us.
Thank you, Galen. Guys, don't go anywhere. We'll be right back. The train keeps going. Grizzle Hard Money, gold, silver, Bitcoin! last, the one, the only, the Greg Foss Bitcoin.
Hey guys, thanks. That's a great intro. I hope it is the best for last, but I want to make sure everyone understands I also own gold and I also own silver. Okay, so I love hard assets.
So, and that's why we had you. You know, we got to bring the camps together, right? It's us against the machine.
It's pretty simple. Gold bugs understand the same things that Bitcoiners understand, and that's the challenge of the fiat Ponzi, right? So gold bugs, silver bugs, Bitcoiners, we're all fighting the same sound money narrative, or pitching the sound money narrative, and we're fighting the fiat Ponzi.
Yeah, go ahead, Margo.
And so let's just talk about that, because U.S. inflation still remains high. The U.S. government continues to deepen its debt, and the Fed recently just paused. Does this all lead to crypto or hard assets being a good place to store wealth right now? Or how are you kind of making sense of this macro environment?
I believe so, yes. I mean, my career has been spent in credit markets, and I believe credit markets run the world. For many reasons, but most importantly, they are the biggest market in the world. There's 400 trillion US dollars of global debt. So you better understand what the debt markets are saying and allocate your investment portfolio accordingly. A couple of things about the US inflation numbers. Understand that they are largely manipulated. They're not the true inflation numbers. So true inflation is actually far higher than the reported numbers. And then also, even though the narrative is that inflation is coming down, I need your listeners to understand that inflation compounds, okay? So last year inflation was 8%. This year they're claiming victory because it's got a 4 handle on it. Well, 8% last year plus 4% this year is over 12% compounded. That's not a good result, people, okay? I hate to tell you, but even though Joe Biden is out there saying, I'm battling inflation, it's like saying, hey, I'm well on my way to losing weight, guys. Last month I only gained 8 pounds, but this month I only gained 4 pounds. Like, I'm losing weight. Can't you see how I'm losing weight? What a bunch of buffoons, right? So.
Well, you know, that is the difference between, you know, eating at Wendy's and, you know, maybe a salad or something. You know, but
it's mathematics. It's math.
It is math, right? And that really is like, you know, I think that's one of the lines you always say, and it resonates heavily, right? It's Bitcoin is math. It is truly it's this dynamic of you know, a hard money asset that just cannot be depreciated at the whims of central banks. And maybe I could. So we had a graph earlier, and you know, bring it up, and it was basically central banks. Central banks have been buying gold, right? And those central banks that have been buying gold have been emerging markets, right? So I just want to get your perspective on. Okay, listen, if central banks are buying the traditional assets they're used to, at some point, if it isn't happening already, the people on the ground, I am my own central bank. Am I buying gold or am I buying Bitcoin? You know, and I think of Africa a lot, Greg. And I think, you know, I saw Bitcoin Africa last year, and I'm like, this is incredible. This, like, it just like, why would I ever trust, you know, any of these, you know, like leaders that you know, totally out there to take their take? But just wanted to get your thoughts on, is there a similar graph where we're seeing central banks say buying gold? What are the people doing?
So great question. You know, we're seeing Bitcoin adoption in third world countries. I use that term loosely, please. You know, lesser developed nations.
Yeah, sure.
So the El Salvadors of the world, the places where fiat currency debasement, like Lebanon and Turkey, is a way of life. Argentina, for example, as I said, I'm in the credit markets. Well, in my career, Argentina has defaulted on their debt 4 times. Now, that's not good as a store of value. So any Argentinian that stored their value in government bonds has been defaulted upon 4 times. Let's be clear about gold versus Bitcoin versus hard assets. I believe strongly in hard assets. I believe Bitcoin is the best hard asset because of its transferability, portability, verifiability, all the things that gold has certain properties of, but are not as good as Bitcoin. That being said, gold has a place in everybody's portfolio, as I believe Bitcoin does. And I don't use the word crypto. Bitcoin is not crypto. Bitcoin is a decentralized ledger. It is markedly different from other digital assets, loosely termed crypto. Lots of digital assets are nothing more than a centralized token that can be manipulated much like fiat money. So be very careful. There's Bitcoin and then there's crypto, and they are not the same. So what I am a very hard advocate of is Bitcoin and other hard assets that have scarcity of supply, verifiability, transferability, most important, immutable. And that's where Bitcoin and the Bitcoin ledger called a blockchain come into play as, in my opinion, the best hard asset in a world that needs to protect itself against fiat money printing.
Greg, can I ask just on that point? You raised a great point on Bitcoin versus crypto. SEC, Gensler, we had Mike Venuto on. He was like, listen, is Gensler a maxi? Because he's clearly drawing the line in the sand. I just want to get your take on how this all shakes out. And does this ultimately, do people leave quote unquote shit coins and where they're like, listen, I don't have certainty here, and that ultimately what you think could be a bear market for all of crypto plus Bitcoin, using the broad umbrella, ends up becoming actually kind of a neutral to maybe a net positive. But I don't know enough of the flow of funds or the money that could transfer over. I kind of wanted to throw that out there.
So I need to be clear. People term me a Bitcoin maximalist, but by certain definitions, there's no way I am, okay? Which is to say, the true Bitcoin maximalist would never say you should own gold. And the true Bitcoin maximalist would never say, you should consider owning silver or real estate or other hard assets. However, having managed money my whole life and knowing that a diversified portfolio mitigates risk to any event in any single asset, going back to your question on digital assets, I have strongly believed that, as I said, Bitcoin is a blockchain. It is the only pure use of blockchain technology because it's purely decentralized. If your token as a CEO, it is a security, very simply. I am not telling people not to own other securities. You're allowed to do whatever you want. But for the purpose of defending your store of value against the fiat Ponzi, Bitcoin is the only digital asset that accomplishes that goal. So does it mean if Gensler describes all other digital assets besides Bitcoin as being a security, that draws some funds into the Bitcoin ecosystem? I don't know. I wouldn't be surprised, but it's not the primary use case. Anybody that owns Bitcoin already understands the fiat Ponzi. They're allowed to go into other digital assets, but they need to understand that's not insurance, as I like to say, on the fiat Ponzi. Doesn't mean you're not allowed to own equities. Doesn't mean you're not allowed to own digital assets that could be termed a security. I just use Bitcoin for my insurance on the ultimate collapse of fiat money. And it is mathematically certain that fiat will continue to debase over time because of the accumulated global debt. That is mathematics as simple as I can lay it out. So therefore, you need to own insurance. Part of that insurance could be gold. As I said, I own some gold, but I own more Bitcoin than I own gold because I believe Bitcoin is a better horse in the race against fiat debasement.
And speaking of, global debt and fiat debasement, I know Ray Dalio was on Squawk Box recently and thinks U.S. government bonds are becoming risky as the country goes deeper into a debt crisis. Would you agree with that statement?
Oh my goodness, guys. So here's the funny thing. I've long admired Mr. Dalio, and as you know, his Bridgewater Associates is the largest hedge fund in the world, using a strategy called risk parity. I won't get into the strategy, but I will tell you that he is, a very smart risk manager. Now, Mr. Dalio is very wise to the debt situation of the world, and he says, yes, you're highly likely to get your $100 back when you lend $100 to the U.S. Treasury. You'll get that $100 back in 10 years. The question is, what is the purchasing power at time t plus 10 compared to the purchasing power at time 0? And he's done the mathematics, and he knows that a bond is nothing more than a fiat contract. And if that fiat is debasing, you're in big trouble, because your coupon is not keeping pace with the debasement. It's simple mathematics. So yes, 100% I agree with Mr. Dalio. Now, the funny thing is, Mr. Dalio famously then goes on and describes some solution. And he goes, I'm not certain the solution is Bitcoin. But then he describes the solution as he thinks it would exist. And my God, he describes Bitcoin. Like, Ray, don't be too smart by a half, okay? It's already there for you, and you're overthinking things. Now, don't let Mr. Dalio take advice from a clown Canadian. I'm just telling you, though, too smart by a half is one of the biggest investment restrictions for most people. They overthink things. Hey, Ray, sure. It already exists. It's called Bitcoin. Don't try and reinvent the wheel.
No, well put. And so are we getting to that point? Like, we've experimented with quantitative easing. It feels like, so let me play devil's advocate a little bit here, right? So, because I manage a precious metals fund and gold bugs and all, and again, the pushback for gold bugs is, you guys are so negative. Right, you don't want the world to win. You don't want people to win. Like, come on, you know what I mean? Like, so, like, can you outline for me, Greg, a beautiful world where fiat currency goes to nothing, but yet we all live fruitful and enjoyable lives? Because what the other side says is that just can't happen. You're Debbie Downer up in here, right? Let's.
So here's the solution. It's quite simple. First of all, fiat currency is good for avoiding barter. You don't have to determine that 3 chickens equals 1 cow, for example. You have a currency that allows you to avoid barter. But what fiat currency is not good at is store of value. So you can actually have a parallel system where a fiat currency exists as a mechanism to increase global trade and allow for global trade, whereas Bitcoin is used as a store of value within the same system. And this is why I think any nation that adopts Bitcoin as a treasury management strategy, like El Salvador, is going to be a winner. And I think I would love Canada to adopt Bitcoin as a store of value reserve asset on their balance sheet, because the Bank of Canada sold all their gold, right? The Bank of Canada was a genius. They sold all their gold. All right. Well, look, I think you should own some Bitcoin, and I think every single sovereign nation should own Bitcoin on their balance sheet. Why? For the children and the people who will understand that ultimately when Bitcoin is and does replace U.S. Treasury bonds as the global reserve asset, you're going to be happy you own some. And so, very simply, the perfect outcome is, I don't want the US dollar to fail. I don't want the Canadian dollar to fail, although we're well on our way. Okay, Canada's a G7 nation, but we will be the first G7 nation to fail. One of the reasons? Well, our prime minister says stuff like, budgets will balance themselves. No, I'm sorry, sir. Budgets do not balance themselves. That is a very irresponsible and, in fact, infantile statement. And if you were the CEO of a company and made such a ridiculous statement, you'd be fired on the spot. However, there is protection against that sort of silliness. It's called Bitcoin. It's not controlled by anybody. It's got a fixed supply of 21 million, and it is based on mathematics and code. And you can't change math and you can't change the code. So I love Bitcoin and the parallel universe that exists where you own Bitcoin as your store of value and you have fiat currency as your international trade mechanism. Yes, that works. But it doesn't work if you continue to print more fiat to pay your bills. And that's the only way the USA is going to be able to pay their bills. That's essentially what Ray Dalio said. You're allowing the USA to print money, which will, if in fact, roll over the debt, and that debt burden continues to expand to the point where in the year 2050, based on the Congressional Budget Office's own mathematics, total debt in the USA will be twice as large as the US economy. Oh my God, 50 trillion US dollars in a number of years. And right now it's 32 trillion. It's going to 50. And then eventually in the year 2050, it'll be twice as large as the US economy, which by some measures should be around 50 trillion. So there you go. There'll be $100 trillion of US debt in the year 2050. And guess what? The only way they can pay that interest burden is by printing more of the money and pretending that they are manufacturing this interest expense. You can't do it any other way, guys. It's only grade 11 mathematics. It's called a debt spiral, and that debt spiral is going to punish everybody.
And so given this backdrop, what would be your advice to the younger generation today when it comes to investing?
Own hard assets, okay? If you are under the age of 30, you need to own something more than 0% of Bitcoin in your investment portfolio. I would suggest you own only hard assets, meaning don't own any bonds, okay? You're allowed to own some equities, and you're allowed to own gold and real estate and hard assets, but you have to own more than 0% Bitcoin, because owning 0 Bitcoin is actually more risky than owning a proper portfolio allocation. Why? I believe ultimately that the price of Bitcoin will exceed $2 million US dollars per Bitcoin. And the math is really simple how I get there. If you guys want to know, we can run through it. But essentially, the asymmetric upside of the Bitcoin price is so material that you need to own something more than 0. And even if it was as little as a 2 or 5% position of your portfolio, but that thing goes up 100-fold, well, you own 5% of something that goes up 100 times, all of a sudden it's 5 times as big as your investment portfolio. That is what's called asymmetric investing, and you have about 3 chances in your whole life to find an investment like Bitcoin. Don't miss this bus. Don't miss this bus.
Yeah, like, Greg, I think you really nailed the point. And again, it's okay. Well, what's the prudent thing to do? Or, or do you just kind of go full? But I think you raise a great point. You don't need to have 100% of your portfolio in Bitcoin. You can have 1 or 2. I'm just throwing out numbers, but it's the same math exists for silver, for gold. The point is that it's an insurance policy, right? You're not going to cry if it goes to 0. Like if it all just ends up being wuzzy woozy, whatever, whatever. Gold ends up becoming a pet rock, and Bitcoin ends up becoming nothing more than whatever the bear sphere. But the reality is that's 2 to 3% of capital you're putting out, versus it's an insurance policy that pays out far greater than any insurance policy you could have, in the real world, right? And so, no, Greg, listen, fantastic overview. Now, you have to tell us about a big conference coming up this weekend, plus all the other great things you're doing. Please tell us, please tell the audience what you're doing.
Oh, thanks, guys, for having me again. Yeah, so there's a Bitcoin conference in Toronto this weekend. It's a 2-day event. There'll be some solid gold and Bitcoiners there. So Larry Lepard or Lawrence Lepard, I'm not sure if you guys know Larry, but he's a gold fund manager in Boston, and he's become a Bitcoiner. He's become also a very close friend of mine. He's coming up for the conference. There's some solid Canadian Bitcoiners in presenting, and it should be a great weekend. What do I do in life? I retired from the hedge fund business about 7 years ago. I like to still manage my own risk portfolio. I'm also involved in a education platform called Looking Glass Education. It's a free platform, understanding how the fiat machine actually works, what they don't teach you in school, because if they did, you would not invest your money in banks, for example, because banks would be deemed too risky. But Looking Glass is a great platform. It's actually being used in the schooling system in El Salvador to teach the young kids how to buy and use Bitcoin. It's called Mi Primera Bitcoin, or My First Bitcoin, is one of the products that has come out of this Looking Glass platform. So I'm a partner in that platform. I'm an advisor to certain companies on Bitcoin initiatives. And basically, I'm a proud dad of 3 kids. And so one of the things I say is, I own Bitcoin, not for myself. I own Bitcoin for my kids, or for the kids. It's that important, people. In the next decade, you are going to see so much calamity in the financial world, or the fiat Ponzi. You need insurance, and Bitcoin is the best form of insurance against the fiat Ponzi.
Greg, always a pleasure. Rock out on the conference this weekend. Can't thank you enough. It's the way to close hard money. Gold, silver, Bitcoin, one big tent.
Thank you, Greg.
Thanks, guys.
Thank you.
Really appreciate
Thanks,
it.
Greg.
Good work.
Appreciate it.
Good work. All right, guys. Thank you very much.
All right, Margot.
That was a wrap. What a great host of speakers.
Incredible. We've reached the end. So that was man, that was a day of learning.
A day of learning. I love the variety too. You know, usually people are like, oh, they don't put Bitcoin in the hard asset category with gold and silver. So it's just good to hear like a variety of speakers, you know.
And everyone was friendly.
Everyone was friendly. There was no fights. There was no fights.
There's no fight. You know what? And that's kind of, but I think what we got out of it was that, listen, Bitcoin is Bitcoin, gold, all of them share the same, you know, the same attributes of being hard money.
Yeah. Yeah.
And that kind of, you know, and one of the ways to get leverage into hard money is to a Bitcoin, but also gold miners, silver miners. These provide excess upside in addition to the price of the precious metal.
Yeah, and it was also interesting to hear the perspective from the guys at Tidal, because they have a bunch of different ETFs if you want to play it too.
Yes.
Whether it's blockchain, Bitcoin, all of the above.
Well, you know, and that kind of is, I think about this, and I think, like, listen, you know, we're in a world where the SEC is now getting into the regulation. Yeah. They're like, hey, listen, this is a security, that's not. But this line in the sand between Bitcoin and all the other quote unquote, you know, cryptocurrencies or shitcoins, it's like, I think that's a watershed moment.
Yeah, no, definitely. Especially here in Canada, you know, we have access to all like the spot Bitcoin ETFs.
Yeah. That's a great point, right? So it's like the US has yet to go there because they don't have these spot Bitcoin ETFs, right?
Yeah.
So before we leave, guys, if you're still tuned in, please give it a retweet, give it a like on YouTube. And Margot, do you want to thank our wonderful, wonderful partners who without we couldn't have made this possible?
Of course, we couldn't have done it without Hilltower Resource Advisors. You all know Shy Girl runs that shop, a boutique natural resource research firm. Tidal Financial Group, a leading ETF platform for emerging ETFs, and last but not least, Grizzle Research and Quant, your source for commodity insights and stock ideas.
Yes. And so, yeah, like you can find each one of those, the respective websites. We'll have the links on the YouTube. Just speaking to the Research and Quant, Margot, we've been very active on the natural gas side.
The natural gas side, yeah. Scott Willis, who should get over here and talk about his analysis. He's really been running the shop on that. We just did one on Pine Cliff Energy, which was great too.
So yeah, it was a host of other companies that we had in the top decile of waiting with a life jacket on, natural gas getting to the other side. That's grizzleresearch.substack.com. It's well worth it. We take a quantitative lens at looking at commodity and growth investing, and then we highlight the names that are the best quantitatively screened, and then we'll drill down into a few companies. And that's That's the product. That's Grizzle Research and Quant. Guys, thank you so much for joining Grizzle Hard Monday. Thank you, everybody.